Welcome to Celebrity Investing, your go-to source for financial and investment information that can help you on your financial journey. Thank you for joining us. Your visit is appreciated. However, if you need professional advice, please seek a licensed financial advisor. Are you thinking of investing but have no money to start with? Don't worry, because in this video, we will explore the strategies and tips on how to invest with no money. Contrary to popular belief, you don't necessarily need a large sum of money to begin your investment journey. By leveraging various creative methods and thinking outside the box, you can still make progress towards your financial goals. Let's dive in. Assess your current financial situation. Assessing your current financial situation is the crucial first step towards investing with no money. By thoroughly evaluating your assets, liabilities, monthly income, and expenses, you can get a clear view of your financial standing and make informed decisions. Let's dive into the two important subsections: taking inventory of your assets and liabilities, and evaluating your monthly income and expenses. Take inventory of your assets and liabilities. Before you can begin investing, it's essential to have a comprehensive picture of your assets and liabilities. This will help you determine your net worth and identify any areas where you can leverage your existing resources. Here's how to take inventory. 1. List your assets. Start by making a detailed list of all your assets, including savings accounts, investments, real estate, vehicles, and any valuable possessions such as jewelry or artwork. Assign an estimated value to each item. 2. Identify your liabilities. Next, identify your liabilities, which include debts and financial obligations. This may include student loans, credit card debt, mortgage or rent payments, and any other outstanding loans. Note down the outstanding balance for each liability. 3. Calculate your net worth. Once you have listed all your assets and liabilities, subtract your liabilities from your assets. The resulting figure is your net worth. This gives you a clear benchmark to work from and helps you gauge your financial stability. Evaluate your monthly income and expenses. Understanding your monthly income and expenses is crucial for effective financial planning and investment. By evaluating these two aspects, you can determine how much you can allocate towards investments and find areas that you can cut back on expenses. Here's how to evaluate your income and expenses. 1. Track your income. Begin by tracking your monthly income from all sources, whether it's a salary, freelance work, rental income, or any other form of income. Make a note of the exact amount you receive every month. 2. List your expenses. Next, create a comprehensive list of your expenses, including rent or mortgage payments, utility bills, groceries, transportation costs, entertainment expenses, loan repayments, and any other regular expenditures. Be thorough and include both essential and discretionary expenses. 3. Analyze and prioritize. Once you have your income and expenses laid out, analyze spending habits and find areas where you can cut back. Make a priority of essential expenses such as basic living costs and debt repayments, then consider potential areas for reducing discretionary spending to free up funds for investment purposes. By assessing your current financial situation, taking stock of your assets and liabilities, and evaluating your income and expenses, you gain a solid foundation for your investment journey. Armed with this knowledge, you can move forward with confidence and make smarter financial decisions. Set clear financial goals. In order to invest with no money, it is crucial to begin by setting clear financial goals. By having a clear vision of what you want to achieve, you can effectively work towards your objectives and stay motivated throughout the investment process. Determine your short-term and long-term objectives. The first step in setting clear financial goals is to identify both your short-term and long-term objectives. Short-term goals means achieving financial milestones within the period of 3 years, while long-term goals are focused on the bigger picture and may span several years or even decades. When determining your short-term objectives, think about what you want to accomplish in the near future. It could be saving for a house down payment or paying off debt. On the other hand, long-term goals may include saving for retirement or working on a sizable investment portfolio. By clearly defining your short-term and long-term objectives, you give yourself a target to aim for and a roadmap to follow. This helps you stay focused and motivated as you begin your investment journey. Create a realistic plan for achieving your goals. Once you have identified your financial goals, the next step is to create a realistic plan for achieving them. This involves breaking down your goals into smaller, actionable steps that you can work towards incrementally. Start by analyzing your current financial situation and determining how much money you can allocate towards investments. If you have no money to invest initially, consider ways to increase your savings or explore alternative sources of income. Next, research different investment options aligning with your goals and risk tolerance. For example, if your goal is long-term wealth accumulation, you may consider investing in stocks, real estate, or mutual funds. On the other hand, if your objective is to generate passive income, rental properties or dividend-paying stocks might be more suitable. Once you have chosen your investment vehicles, determine how much you need to invest regularly to reach your goals. Create a budget that will allow you to allocate a part of your income towards investments while still covering your essential expenses. Lastly, track your progress regularly and make adjustments to your plan as necessary. Review your portfolio performance, reassess your goals, and make any necessary modifications to your investment strategy. By setting clear financial goals and creating a realistic plan, you lay the foundation for successful investing, even with no initial capital. Remember, patience and discipline are key, and with consistent efforts, you can gradually build your investment portfolio over time. Note: the content provided here is for information only and is not to be seen as financial advice. It is always recommended to consult a qualified financial advisor before making investment decisions. Educate yourself on investment options. Investing is the best way to grow wealth and secure your financial future. Even if you don't have a lot of money to invest initially, there are still opportunities available to you. The first step to investing with no money is to educate yourself on different investment options. By doing so, you can make informed decisions and maximize your returns. In this section, we will explore two key aspects of educating yourself on investment options: researching different investment vehicles and understanding the risks and potential returns. Research different investment vehicles. When investing with no money, it's important to explore the different investment vehicles available to you. There are various options to consider, each with its own advantages and disadvantages. Here are a few investment vehicles you should research. 1. Stocks. Investing in individual stocks makes you the partial owner of a company. Research different industries and companies, and consider factors such as market trends, financial performance, and future prospects before making investment decisions. 2. Exchange-traded funds, ETFs. These investment funds hold a portfolio of assets, such as stocks, bonds, or commodities. They offer diversification and can be a good option for beginners. 3. Mutual funds. Similar to ETFs, mutual funds gather money from many people to invest in a diversified portfolio. Research different mutual funds based on their investment strategies, performance history, and expense ratios. 4. Real estate investment trusts, REITs. REITs allow investors to own shares in a portfolio of properties, such as residential apartments, office buildings, or retail spaces. Research different REITs and consider factors like location, property type, and potential rental income. Understand the risks and potential returns. Before investing, it is crucial to understand the risks associated with each investment option. Higher returns often come with higher risks, so it's important to strike a balance that aligns with your risk tolerance. Here are a few considerations to keep in mind. 1. Risk assessment. Evaluate the risk associated with each investment option. Consider factors such as market volatility, industry trends, and the specific risks mentioned in the investment prospectus or disclosure documents. 2. Historical performance. Review the historical performance of different investment options. Look at the average annual returns over the long term to get an idea of the potential returns you would expect. 3. Diversification. Diversifying your investment portfolio can help mitigate risk. Invest in a variety of assets across different industries and regions to spread out the risk. 4. Time horizon. Consider your investment time horizon. Some investments may require a longer commitment, while others may provide quicker returns. Align your investment choices with your financial goals and the time you can afford to keep your money invested. Remember, investing always carries some level of risk, and there are no guarantees of returns. Therefore, it is important to research and understand the investment options available to you and make informed decisions based on your financial situation and risk tolerance. Investing with no money may require creativity and resourcefulness, but with the right knowledge and a solid strategy, it is possible to build wealth over time. Stay tuned for the next section, where we will explore the various ways you can start investing with little to no money. Leverage online investment platforms. In today's digital age, investing has become more accessible than ever before. Thanks to the emergence of online investment platforms, individuals can now participate in the investment world with limited financial resources. In this section, we will explore 2 key ways to leverage online investment platforms, through robo-advisors and micro-investment apps, as well as through peer-to-peer lending platforms. Explore robo-advisors and micro-investment. Peer-to-peer apps, robo-advisors and micro-investment apps have revolutionized the investment landscape by making it easier for individuals to invest even with limited funds. These platforms utilize sophisticated algorithms and technology to provide automated investment services, eliminating the need for significant capital upfront. Robo-advisors are digital platforms that offer personalized investment advice and manage your portfolio on your behalf. They take into account your financial goals, risk tolerance, and timelines to design a diversified investment portfolio. With low minimum investment requirements and low fees, robo-advisors offer an excellent option for individuals looking to invest without substantial financial resources. Micro-investment apps, on the other hand, allow you to invest small amounts of money regularly. They round up your everyday purchases to the nearest dollar and invest the spare change into a diversified portfolio. This approach, known as micro-investing, enables you to gradually build your investment portfolio over time, starting with minimal funds. By exploring robo-advisors and micro-investment apps, you can easily kickstart your investing journey, even if you have limited money to spare. Utilize peer-to-peer lending platforms. Another avenue to consider when looking to invest with no money is peer-to-peer lending platforms. Peer-to-peer platforms connect borrowers with lenders directly. As an investor, you can lend money to individuals or small businesses, earning interest on your investments. Peer-to-peer lending platforms provide an opportunity to diversify your investment portfolio and potentially earn attractive returns. They often have lower investment minimums compared to traditional lending institutions, allowing you to start investing with smaller amounts of money. Before participating in peer-to-peer lending, it is essential to understand the associated risks, such as the potential for default or late payments. Therefore, carefully analyze the borrower's profile, creditworthiness, and repayment history before deciding to invest. In conclusion, leveraging online investment platforms opens up a world of opportunities for individuals with limited financial resources. Through robo-advisors and micro-investment apps, as well as peer-to-peer lending platforms, you can begin your investment journey and grow your wealth, even with no money to start. Take advantage of these modern tools and platforms to make your money work for you, regardless of your initial investment amount. Remember to do thorough research, seek professional advice when needed, and stay disciplined in your financial goals. With patience and persistence, you can gradually build your wealth and achieve your long-term financial objectives. So don't let the lack of money hold you back from investing. Take action today and start paving the way towards a brighter financial future. Continue to watch our videos to gain valuable insights into the world of finance. Thank you for watching. Please comment, subscribe, like, and share to continue getting information to help in your financial success.